Hello and welcome. Okay, so in this particular video, we're going to be talking a little bit more about taxation examples. This is a harder example and it's got quite a bit worked into it. So we want to sort of unpick everything that can be involved. So with everything that's happening in terms of this video, part of the things that we need to understand is each one of these steps, this A, B, C, D, all of these sorts of things, they are a scaffold in terms of how you would answer a question. Okay, so we might talk a little bit about this as we go along. This will be a little bit of a longer video, but just bear with me, okay? So first things first, let's actually understand what's happening on the page in front of us. We have a tax table up here, okay? So that's going to be really, really useful for us. These tax tables usually come in later on in the question after we've calculated what's known as our taxable income. Here we have a little bit of a question. So I'm going to suggest that we actually focus on calculating that first. So it says during the 2022 to 2023 financial year, remembering that that happens in the middle of the year, Richard earns $1,050 per week or $54,600 per annum, okay, from his employer and other sources, okay? Now, on top of that, let's just highlight that because that's really, really, really important for us to have, okay? He also has receipts for $370 for work-related expenses and donations. The number one mistake that I see students making in terms of these questions is when they go and calculate tax, they calculate it on the gross income. So part A, we actually need to calculate the taxable income. There's a special rule for that, okay? Knowing that taxable income is actually equal to the gross pay minus tax deductions. Okay, so tax deductions are exactly what's mentioned up there. They can be things like work-related expenses such as travel, fuel costs, uniforms, all of those sorts of things that can be deducted down because you don't have to pay tax on those particular items. Okay, so where you can identify them, you want to identify them because it means you'll pay less tax. Okay, in this particular case, the gross pay here is the $54,600 per annum. So our gross pay before we've done any deductions, any tax deductions anyway, okay, is 54,600, and then we're going to subtract off $375 for any work-related expenses or donations. What I would then like you to do after you've done that calculation is realize that this is probably the most important part of any question that we're doing for this particular topic, okay? So I want you to put in whatever way you want, but a little bit of a reminder, I usually do an asterisk, okay, right next to that amount, because we're going to keep coming back to it throughout the rest of the question. That's why I put it first. It's so important. Okay, so now what we're going to do is we're going to use our tax table in part B to go and calculate our tax payable amount. Heed my words, this is not the total tax payable. This is just the tax payable, just a tax payable on the income. Okay, we'll talk about total tax in just one moment. Okay, so to go and calculate the tax payable amount, when you see that, I want you to think, okay, this is where we use the table. So as I mentioned to you before, okay, we need to make sure that we use this thing when we're using the tax, when we talk about the tax table, because this is our taxable income, so it matches our income tax table. Just like in our previous example, okay, we want to make sure we identify which category that we fit into. So we have $54,224, which means we fit into this tax bracket here, and we have to use that rule. Okay, so what we do if we're going to calculate the income tax, okay, or tax payable, I usually write income tax just to help me differentiate it because there's lots of times that we use tax in sort of a question. Okay, it's equal to the rule. So you'll notice that it initially says $5,092. So we calculate that 5,092 plus, if you remember from our last example, 32.5 cents. That's a percentage of every dollar. So we're going to write that as a percentage. So 32.5%. You can also put it over 100 if you prefer fractions. And then it says for every dollar over 45,000. So now we're going to calculate that excess amount above 45,000. Okay. So our income, our taxable income here, 54,225 is coming from this red asterisk. It's so important that we use that and we don't use this $54,600 per annum because that is not correct, okay? All right, then we're going to subtract off $45,000. After you've gone and done that, at this point, you can enter that into your calculator, okay? All right, do some simplification, and you should end up with $8,090.13. That has been rounded to 2 decimal places, okay? Now, the next part of the question is going to calculate something known as the Medicare levy. Okay, calculating the Medicare levy, we use that to pay for goods and services that are medical related, such as doctor appointments, hospital bills, all of those sorts of things as a part of the way that the healthcare is structured inside of Australia. Okay, I'm going to highlight another word for you that's really important. It is 2% of the taxable income. Now, again, what we're calculating here is not 2% of the $54,600. I can't stress that enough. It's 2% of the first thing that we calculated, the taxable income, 54,225. So what we do to calculate our Medicare levy, because this is a tax as well, it's just a different type of tax, okay? We take 2% and we multiply it, okay, by our taxable income, 54,225. Once we've done that, we're free to plug that directly into our calculator. Again, we can make the percentage a decimal or a fraction if we'd like. And we'll notice that we end up with $1,084.50 after we're all said and done. Okay, so the Medicare levy is often easy for us to go and calculate marks with. Okay, the next part is that it asks you what is the total tax. The total tax is quite important because what we need to do is we need to add both the tax payable and we need to add the Medicare levy together because they are both taxes we have to pay. So total tax is equal to our income tax, which we calculated in Part B, plus our Medicare levy, which we just did a moment ago. We add those two values together. Okay, all right, and once we've simplified that, it will work out to be $9,174.63. Okay, that's our total tax payable. Okay, in the final question, it says during the financial year, Richard's employer sent a total of $7,797 in tax to the Australian Taxation Office. Okay, we're being asked, has Richard paid too much or not enough? So what this works out to be, we need to understand, just being a little bit careful, okay? When we say the employer is paying the tax on behalf of the employee, that's really common, and that's known as pay-as-you-go tax, okay? So sometimes different things can shift and your employer may not have paid enough, but that's okay. You go through the calculation process and you go from there. So what we need to do, we can see automatically that our tax that we have to pay is $9,174, okay, and 63 cents. Okay, but our employer has only paid $7,797. So no, we haven't paid enough. In fact, we want to calculate whether or not it's going to be a tax refund or a tax debt. So we say, no, we haven't paid enough, or Richard hasn't paid enough. Okay. And then it's always a good idea, because sometimes the question will ask you this, to actually calculate how much is owing to yourself or to the taxation office. Okay, so the debt that's owed is equal to 9,174.63. Subtract off 7,797. Okay, we're going to find the difference between them. And once you've done that, you'll end up with $1,377.63. So that is how much Richard is going to owe to the ATO, okay, the Australian Taxation Office, after it is all said and done. Okay, all right. So I can't stress it enough. All the way through the question, you're going to keep referring back to the taxable income, not the gross income. Okay, be really, really, really careful. That's why we put this asterisk here, so we know that we keep referring to it. Okay, all right. Thank you very much. Okay.